Hello students, welcome to EPG Pathshala. I am Dr. Vishal from Maharaja Agarsen University, Badi, Himachal Pradesh. Today, we are going to talk on module role of central and state government in promoting entrepreneurship from the paper Entrepreneurship Development and Project Management. After completing this module, you will be able to understand the concept of entrepreneurship development, the protective and promotional measures for the growth of SSI, the importance of central government incentives for setting up business in backward areas, and various financial institutions which are providing loans for the growth of business. Students, new entrepreneurs start enterprises which are in small scale. The enterprises may a production unit or a service enterprise. In case of service enterprise, the funds required for fixed investment is generally small and working capital requirement may be relatively high. Whereas for a production unit, the fund requirement for fixed investment as well as working capital are sizable. There are many challenges in successfully operating a small enterprise, considering its limitations on the finances, the technology adopted, market reach, level of skills that it can employ, and the quality of the product or service that it can deliver. Small enterprise has its own advantages of quick decisions, low cost of production, low investment per employment created, etc. They are backbone of the economy, hence require all the support from the government. In order to support, protect and promote small organizations, a number of protective and promotional measures have been undertaken by the government. Let's discuss about the current scenario. Students, the output of small scale industrial sector contributed approximately 40% of the gross industrial value added and 45% of the total exports which are from India, whether direct or indirect export. It is the second largest employer of human resources after agriculture. The growth of small scale sector has therefore been assigned a significant role in India's national plans. Most of the institutional support, incentives, and small services provided by the state government, others are offered by the central governments in different proportions in order to attract investments, promote small industries with a view to increase the industrial production and to generate employment in their respective states and the nation as well. There are various programs and schemes to assist and help the entrepreneurs, especially small scale businesses. Apart from this, there are several other ministries which have also been supporting the cause of MSME and SSI sectors. Now, we'll talk on promotional measures of the government. The various promotional measures cover industrial extension services, provision of training facilities, provision of developed sites for construction of sheds, institutional support in respect of credit facilities, assistance for domestic marketing as well as exports, supply of machinery on hire purchase terms, technical consultancy and financial assistance for technological upgradation, special incentive for setting up enterprises in backward areas, etc. Now we will discuss the central government policies. Various central government policies are policy of reservation, price and purchase preference, reservation of items, licensing, trade policy, foreign investment regulations, labor policies, foreign direct investment approval, NRI investment approval, Ministry of Steel, steel products standard policy for manufacturing, Industrial policies. Under industrial policies, there are some policies which are covered under priority sector, and these are Northeastern Policy, Women Entrepreneur, Policy for a Tiny Sector, Cottage and Village Industries, Handicrafts, Khadi and Handlooms, Development of Backward Areas. Funding and Finance. Under funding and finance, there are many policies like taxation, excise duty, credit policy. Modernization and training. Under modernization and training, the policies are quality standard policy. Under energy and environment, the policies are pollution control measures and environmental control. Students, government provides a lot of support for entrepreneurs who are wishing to set up their own business or who already have one. The government provides grant to those business that are located in areas that have low employment and very little growth in India. There are incentives being given by the state and central government. Many of the incentives are provided sector-wise, which are being given by the concerned ministry. Benefits given by central government for setting up business in rural areas. Indian central government and various state governments give numerous benefits and incentives to promote the basic manufacturing industries and for entrepreneurship development of rural areas. Both the state and central governments share the cost of some of the incentives provided. The main aims of such incentives are to develop rural and backward areas and enhance employment opportunities for local inhabitants of such areas. The following are the basic incentives. A subsidy at the rate of 15% of the investment amount in plant and machinery is given under the Capital Investment Subsidy Scheme. Subsidies for transportation to promote industries in areas that are not easily accessible like remote hilly areas. Under this scheme, a subsidy of 50 to 90% on transportation cost is available. A subsidy for interest relief is also provided at a rate of 3.5% for new industrial units in some areas. Now let's discuss the government financial institutions for providing loans to start industrial venture in India. Indian financial sector plays an important role in the overall development of the nation. Indian government, for the purpose of sufficient supply of credit to different sectors of Indian economy, has created a valuable structure of financial institutions in India. Depending upon the geographical coverage of their functions, these financial institutions can be classified into state level institutions and all India institutions. At the national level, FIs provide long-term and medium-term loans and advances at a very genuine interest rate. Their main functions are to underwrite public issue of shares, debentures, issue of companies, guarantee loans and deferred payments, etc. On the other hand, the state level institutions are basically linked with the development of medium and small scale institutions, like they deliver the same type of financial help at the national level institutions. There are two main national level financial institutions which provide loans to the entrepreneurs, and these are government financial institutions for providing loans to start industrial venture in India. Two types of government financial institutions can be discussed in two categories. One is national level, and under the national level we have IDBI and IFCI. In case of state level, we have the institutions like SIDC and SFCs. We are going to discuss now the Industrial Development Bank of India, called as IDBI. Industrial Development Bank of India aims to create a principal institution for long-term finance to provide administrative and technical support to the industries, to coordinate the institutions which are working in this field for planned development of industrial sector, and to conduct research and development activities for the benefit of industrial sector. Industrial Finance Corporation of India, IFCI. The government established the Industrial Finance Corporation of India on July 1st, 1948 as the first development financial institution in India to deal with the long-term finance needs of the industrial sector. The newly established DFI were given low-cost funds through the central bank's statutory liquidity ratio, called as SLR, which in turn enabled it to give advances and loans to the borrowers of corporate sector at concessional rates. On the state level, loans as well as finance can be availed from state financial corporations, called as SFC. Under the provision of the State Financial Corporation Act 1952, the SFCs are established in the various states for giving loans and advances to small and medium scale industries. There are 18 SFCs operating in 17 different states, including the Tamil Nadu Industrial Investment Corporation Limited and Delhi Union Territory. The SFCs are under the direct control of the relevant state government and the IDBI. The SFCs have similar functions to those of the IFCI. Its main function are to provide financial assistance in the form of advances and loans, underwriting of new issues, subscription to shares and debentures, and guarantee of loans. But in reality, they have concentrated mostly on advances and loans only. Therefore, there is a need for reorientation of their loan policy. There are 18 state financial corporations in the country, and these are Andhra Pradesh State Financial Corporation, Himachal Pradesh Financial Corporation, North Eastern Development Financial Corporation, Rajasthan Financial Corporation, Tamil Nadu Industrial Investment Corporation Limited, Madhya Pradesh Financial Corporation, Uttar Pradesh Financial Corporation, Delhi Financial Corporation, Gujarat State Financial Corporation, the Economic Development Corporation of Goa, Haryana Financial Corporation, Jammu and Kashmir State Financial Corporation, Karnataka State Financial Corporation, Kerala Financial Corporation, Maharashtra State Financial Corporation, Odisha State Financial Corporation, Punjab Financial Corporation, West Bengal Financial Corporation, State Industrial Development Corporation. The SIDCs came on the scene much after the SFCs. Besides giving finances, these types of institutions perform a variety of functions like licenses for industrial units, arranging for land, power, roads, sponsoring the establishment of such units, especially in backward areas. It also provides working capital margin to the entrepreneurs as a term loan. Now, Let's discuss about government schemes. The government schemes available for the industrial development of a state may be categorized as making available infrastructure at concessional or reduced rates and providing cash subsidy and incentives which amounts financial gains to the entrepreneur. These schemes are loans and subsidies at a very attractive rate of interest, electric power supply at a reduced tariff, land at subsidized prices, or industrial sheds to set up small scale industrial units. Various tax concessions for a number of years, and these may include exemptions from sales tax, etc., for a set period of time. Various schemes of the government for entrepreneurs are: number one, providing assistance for acquiring land. In case the entrepreneur requires land in particular area suited for his type of industry, government will notify the land for industrial use and acquire it by paying compensation to the owners of the land, which may be less than the market price, plus reducing the effort required to by promoter to deal with the owners of the land and time involved. Next, providing land in industrial area. Government, depending on its policy of dispersion of industries for uniform development of state, develops industrial are by providing roads, drainage, power, water, telecommunication, and civic amenities so that the entrepreneurs can set up their industrial units in these fully developed industrial areas. Further, certain industrial areas are developed to house specific type industries such as electronic industries, software industries, pharmaceutical industries, etc. Such industrial areas are equipped with facilities required by the target industries. The cost of the land in such location is at cost basis, which is much less than the market price. Providing shed in industrial estates. Government constructs industrial sheds of different sizes in the identified locations and allocates them to the entrepreneurs, thus reducing the cost, time, and effort involved. Such sheds are in fully developed estates or areas where roads, drains, power, water, etc. are available. The exhibit shows various incentives offered by the government to entrepreneurs, which will be discussed in detail in the next slides. These financial incentives are providing capital subsidy, concessions in the payment of stamp duty, sale tax concessions or deferment, interest subsidy, export subsidy, funding the educational and industrial tours, income tax benefits, rehabilitation allowance, expenditure on scientific research, depreciation, and investment allowance. The government schemes for making available financial incentives to entrepreneurs are described as follows. Providing capital subsidy. The government, depending on its policy of dispersion of industries all over the state for all around development, provides capital subsidy to make it attractive for the entrepreneurs to set up their units in the backward districts of the state. Even the industrial areas and sheds are developed in the backward district of the state. Concession in the payment of stamp duty. In order to encourage entrepreneurs, government has given concession on the stamp duty applicable while registering the industrial land, which is financial gain to the entrepreneurs who register the industrial land in their name. sales tax concessions or deferment. New industrial units were given sales exemptions to the extent of twice the amount of investment made in the industrial units set up in the state. There used to be a scheme which exempts sales tax payment or remittance by the unit for a period of 3 years. Interest subsidy. The government extends interest subsidy on the loan extended to certain class of entrepreneurs such as women entrepreneurs, ex-servicemen, etc. The interest subsidy is in terms of a percent or less. There are schemes which require lesser contribution from women entrepreneurs in the equity contribution. Export subsidy. Government charges reduced interest rates for funds involved in exports to promote export and to make the export price competitive in the market. Funding the educational and industrial tours. The government extends subsidy and assistance to entrepreneurs to undertake tour both within the country and abroad for visiting or participating in exhibitions. Income tax benefits. Income Tax Act 1961 under Section 80J, new industrial undertakings including small-scale industries are exempted from the payment of income tax on their profits, which is subject to a maximum of 6% per annum of their capital employed. The exemption in tax payment is allowed for the period of 5 years from the date of commencement of production. In order to avail this exemption facility, a small-scale industry has to satisfy the following two conditions. The unit should not have been formed by the reconstitution or splitting of an existing unit. And number 2, the unit should employ 10 or more workers in a manufacturing process with power or at least 20 workers without power. Rehabilitation allowance. According to the Section 33B of the Income Tax Act 1961, the rehabilitation allowance is allowed to small-scale industrial units and the manufacturing small enterprises. The rehabilitation allowance is given to only those small businesses that had suffered because of the following reasons. Action taken in combating an enemy or action by an enemy. Cyclone, flood, earthquake or other natural upheavals. Civil disturbance or riots, explosion or accident fire. Expenditure on scientific research. Following deductions in respect of expenditure on scientific research are allowed under Section 35 of the Income Tax Act 1961. The capital expenditures, except land, incurred on scientific research must be related to the business of the assessee, but it is subjected to the provision of Section 35 subsection 2 of the Income Tax Act 1961. The revenue expenditure must be incurred on scientific research related to the business of the assessee in the current previous year. The sum that it pays to a scientific research association or a university or college or institution or to a public company which must have its objective of scientific research. A small-scale industrial unit is entitled to a deduction on depreciation on block of assets at the rates which are given under Section 32 of the Income Tax Act 1961. Depreciation deduction from the actual cost of plant and machinery is allowed subject to a maximum of Rs 20 lakh in case of the small-scale industry. Diminishing balance method is used to calculate the amount of depreciation. In case of an asset acquired before the accounting period, depreciation is calculated on its written down value. An additional allowance called extra shift allowance is available for the plant and machinery that is used in the manufacturing in double or triple shift. A small scale industry should fulfill the various conditions before it becomes eligible for claiming the deduction in depreciation. This deduction of depreciation is allowed only on fixed assets, that is, building, plant, machinery, furniture, etc. The asset must be used actually in the business or profession of assessee. The asset must be owned by the assessee. The income tax officer must be satisfied with all the prescribed particulars as required under section 34 subsection 1 of the Income Tax Act 1961. Investment allowance. In 1976, the investment allowance was introduced in order to replace the initial depreciation allowance. This allowance is allowed at the rate of 25% of the cost of acquisition of new plant or machinery installed as per section 31A of the Income Tax Act 1961. Actually, the investment allowance has been made available for the things or the articles except certain items of low priority initially, but according to the 11th schedule of the Income Tax Act 1961, a special dispensation has been provided for the plant and machinery installed in small scale industry. The important condition for claiming the investment allowance that the small scale industrial unit has put to use machinery or plant either in the immediate following year or in the year of installation following which the benefit will be forfeited. Scope for further improvement in extending financial support to the entrepreneurs by the government. While government has been instrumental in providing credit flows to the SMEs and has made available subsidies to encourage entrepreneurs to set up their ventures in the backward areas of the country, there is scope for further improvement in extending financial support to the entrepreneurs which are listed below. Presently, government subsidies are released over a period of time to SMEs. This can be made to set off against the taxes that are payable to the government. Thus, the subsidy amount is available to SMEs as soon as they start functioning, which can be used to repay bridge loan availed by them. This can also be remitted to the loan account of entrepreneur. Rope in the private sector banks to provide finance to SMEs in line with the nationalized banks in respect of duration, debt equity ratio, and interest rates. Considering the limitations of the SMEs with regard to the size, technology, and the skill of the employee, that they can further, etc., schemes for reimbursing the portion of tax, whether sales tax or VAT, paid them to the government can be withdrawn up. Make available the concession in excise duty on the purchase of commercial transport vehicles used for transporting employees. The depreciation allowance, which can be up to 100%, needs to be increased to the level of 150%, taking into consideration the inflation factor which has reached double digit. Alternatively, make available a formula for computing depreciation in which factor of inflation is embedded. Fix a time limit for processing of loan applications of SMEs in financial institutions and banks. Create an agency to deal with the NPAs or closed industrial units to dispose of the asset and use the proceeds to repay the dues, provide enough funds with the banks for financing the requirement of SMEs by increasing the percentage of loans to extended to priority sector, allow reappropriation only during January to ensure earmarked funds is utilized for financing requirement of entrepreneur. So students, let's now summarize what we have learned in this module. Entrepreneurship is a vital source of change in all the facets of society, empowering individuals to seek opportunity where others see insurmountable problems. The entrepreneurs possess innovative and different ideas to achieve their goals and help to build a better environment in their own sector of expertise. In order to make their plans successful, there are different financing programs made available for the new entrepreneurs who are about to start their business and also for the small business growth by the government. At the same time, knowing government help is available, there are certain entrepreneurs who are hesitant to get assistance from the government, which may be due to the fact that they are already financially sound and can manage their resources at their own.